Good afternoon, everyone. Welcome to the ET webinar. I'm Vartika, the moderator for today, and we would like to thank all of you for tuning in today. The weather in Delhi NCR is bright and sunny with moderate temperature. So is the point of our conversation. Today's webinar discusses the CFO's edge, understanding the value shift with digitalization, and explores how CFOs can help in this transition, which is no longer optional for any modern day corporate. We hope today's session will prepare you for the year ahead. With this, we have with us two really good speakers who between them bring the expertise, experience, and wisdom. Please join me in welcoming Praveen Dukania, CFO of the technology backbone of Goods and Services Tax, the GST network, and the expert Guru Prasad Gaonkar, who is responsible for digital transformation orchestration across industries. He is the APAC SaaS leader for Oracle in Japan and Asia Pacific countries. We will begin with short opening statement by each of the speakers, followed by an interactive session. We request all the participants to keep sending your question on the private chat window. In the interest of using time productively, we will collate them and present them to the speakers. Also, before we begin, request you all to just spare a few minutes to answer a very brief poll. So the question is, how would you identify your finance function in the organization? So 64% of the participants say that they're innovators, they're setting up models for the rest. And 27% say they're waiting and watching for the next innovation and they'll work accordingly. And 9% of the people are saying that they would use tried and tested models for their organization. Great. So, moving on, I think for all these things, CFOs really need to gear up to be digital CFOs. Digital CFOs, I think digital CFO is one of the most popular terms associated with the finance function in recent times. Perhaps it is one of the most misunderstood terms too. So let's deconstruct what digitalization actually means for CFOs and what it requires from finance professionals and other functions. I would like to invite Praveen Dokania to take off this conversation from here. Hi, Mr. Dokania, over to you.
Thank you, Vartika, to set the context on very rightly that what is digitalization and how it is overrated or underrated. So let me begin with how the finance function is traditionally and going forward is looks like. So finance function is generally it's a stand with 5C. It's a cost, control, compliances, communication, and then custodian. Generally it's said that finance is the custodian of the asset, custodian of the data and all. So all these five is the important pillar for any of the finance profession, any of the CA or the senior finance executive in the company. So digitalization, when we see that digitalization, so we have to identify each one of the pillar, that how it's going to impact and how it's going to take on advantage on that. Let's go along with the cost. So how the digitalization is going to improve the cost metrics of any organization, how the digitalization is going to simplify the things, and how the digitalization is helping reducing the cost, better production planning in case of a manufacturing company, in case of a service company, how the like integration of the various verticals so that the cost structure, cost planning can be done in a better way. And whereas in like in a compliances set, so most of the CFOs, traditional CFOs, 50% of their time spent on compliances. And these are days where everything is going, even the government and regulatory bodies, they are going into digital mode. Like my GST in itself, we are prompting and doing the major tax reform of the country, and where we are prompting each and every individual, every taxpayer, every dealer, every trader to go in a digital mode. Earlier, which was in into like manual mode, and which takes a lot hell of their time. So that time gained, they can focus on their core business. So that's on the compliances side. I think it's a one of the biggest challenge for the CFOs, that how to simplify the compliances, how to make the compliances really error free and on time. So that's a, whereas I think the digital is going to help a lot, where the data, the submission of a data, the efficient tool where it can interact with the other platform, where the return has to be filed, like income tax or GST return and so many other compliances. So that's a one challenge, and it will really make CFO sleep in a cool way. So that's a compliances part. And third, most important thing is, like, if you see that custodian of a data. So most of the in the most of the organization, in a mediocre organization, CFO takes care of the total IT function as well, and he has to take care of the various data security and other things. So if you go on a digital, and particularly how the data is going to store, what could be the security policy, how it's going to take this forward and all. So here the role of digitalization again come on. And then the third one is the control aspect. So fourth one, so control is a major aspect for any CFO, that every system process are inbuilt so that any kind of a risk associated with those process can be taken care of. So that's an important thing for any CFO, that inbuilt controls are so strong with the help of technologies, so that the mitigation of risk or any instant of a risk can be immediately identified. So the control process make the process simplifier for the user, in case of a for the other executive for making any decision, so that the process can be simplified. So that's a, I understand. So those five parameter for any of the CFOs is very important, and they have to, one has to see that how that can be integrated with the best technology and increase the efficiency. Because these are days CFOs, earlier CFOs are told CFO should be active then proactive, but these are days CFOs has to be predictive. They have to foresee the future, and in any company CFO plays a major role in predicting the business strategy, designing the business strategy, the predict the requirement of a cash flow, the resource management and everything. So that's my take on this. I think Guru can add something on it if you want.
Guru, would you like to add anything to this?
No, I think Prabin has obviously stolen the show. He's given a clear perspective as a practitioner himself on the role of the CFO. Obviously, we'll touch a little bit more upon that when we talk about setting the future state of finance.
All right, so I think very rightly put, Praveen, that CFO is a custodian of data today, and the main responsibility for CFO is to convert data into insights, empowering the right function in the organization, to use it. So I think with this we have time for another poll question, and here is the question. So emerging technologies such as robotic processing automation, machine learning, artificial intelligence, blockchain technology, and so on are relevant for finance function. What do you think, participants? I think we're getting a really good response here. So most of the people think that yes, 87% of the participants think that yes, it is relevant. It is very relevant in today's time. So moving on, uh, so this brings us to the point, why are we talking about digital transformation now? What is this value shift that we're talking about? And I would like to ask Guru to share his expertise and experience, as he has been working with Office of Finance, Operation, Information Technology, and Digital Supply Chain. So over to you, Guru.
Okay, I think thanks, Vatika, and thank you, Praveen, for stepping up the temperature on this topic. So, what I'm going to do is talk a little bit more about the future state of finance, and I'm going to benchmark it on the PwC report, which talks about finance effectiveness as of 2017, and it's more about the effectiveness, going forward. Typically, I would actually start by asking questions to the CFOs of what has been their observation in terms of the role of the CFO having changed in the last 8 to 10 years. And many actually share with me that it has changed, but it has not been significantly changed. The second question I would start with asking CFOs is that how do you think is your role and office as a finance in your function is going to change in the next 8 to 10 months? And that is where I see many of those hands go up. And I want to bring that topic to what I want to discuss here is that with the advent of ERPs, we have seen that the role of bookkeepers was completely eliminated. So bookkeepers started doing an accountant's role, accountants started to do a controller's role, and a controller started to do a CFO's role. The question is more about what is the role of the CFO and what is the CFO doing today? In our observation, most of the CFOs today are actually doing a controller's role, whereas the board or the CEO are expecting the CFOs to have more of a decision support as compared to transaction support, which is what most of the CFOs have been doing as of yesterday or even rather today. And because of which, finance is seen as a cost to the business, not adding the same level of value. So this is where, I would ask many of our colleagues in finance to basically, assume the role of the future state of finance and take that challenge to be able to introduce new practices, new technologies, bring in new skills that increase that capacity to do business. I would like to also take a little bit further to share in terms of, again, taking that report of further from PwC to share with you on what has been the role that finance has been focusing on as of today. And as you can see, it is spread across right from planning to transactional support to control to compliance and advice. But where are we going to see in terms of the state of finance or the future state of finance? And I would like to share a perspective that was done based on the survey with most of the CFOs. It specifically focused on three things. Number one, very much focused on plan, which is around strategy and performance as compared to transactional support. Second, with evolving business model and digitization of processes, you will see new headcount structure, new skills, new practices being adopted, especially when it comes to report, compliance, and account. And third, we will see a lot of balancing where the question to the CFO is not going to be what cannot be done or what can be done, more in terms of what can be achieved with what has been done, as a function already. So that is where we're going to see a lot of focus on. Sorry, I think I've got a little bit problem with my screen here. So, okay, so I want to talk to you about a little bit about the pace of change, and obviously you are aware with very much what's happening from a regulation and compliance perspective, competition perspective, and technology perspective. The perspective that I'm going to share with you is not about the pace of change, but the question on what is the ability of your organization to respond to this change and the risk that you carry if you're not able to respond to the pace at which it is expected. Then a little bit of more perspective in terms of where we're heading as finance as a function. What you see on the left-hand side is the current state of headcount. And if you had to go back and reflect the state of headcount in your own organization, and I see that there are 52 or 60 plus participants on this call, you would see that most of your headcounts is very much focused on transaction processing, processing AR, processing AP, those kind of discussions. But there's a lot of focus on reporting and compliance and very less on insight and action. The way we see this going, especially with automation, where there's going to be a drastic reduction in transaction processing and that pyramid is going to invert, where there's going to be a lot of focus on strategy and performance management with insight and action, and it's going to taper down in terms of focus on transaction processing. And this is where the enablers of such a model is going to come from these core elements, be it analytics, process mining, cloud, blockchain, and robotics. But from our view of this world, cloud is going to be the foundation of this fundamental value shift, as Vatika put it, precisely for three reasons. Number one, cloud is going to translate to speed in finance, keeping you continuous up to date on technology, but also keeping you up to date on evolving direction of compliance and regulation from a business point of view as well. Second, it's going to eliminate most of those complexities that come with organizational procedures and processes, putting into a new business model. And third, it is going to give you access to sophisticated tools in data science, embedded analytics, visualization, statistics at economical price points. So just want to leave you with that thought in terms of how cloud is going to be the foundational enabler for this shift from current state headcount to future state headcount. Now, obviously, there's more to discuss about it in this panel, as well as more in person. Over to you, Vartika.
Thank you, Guru. Guru, you said something about the risk that the finance leaders will carry if they do not move with the speed of digital. So, can you throw some more light on it? Can you please explain it a little more? What are the risks?
Yeah, so look, I mean, if you look at what are CFOs expected, or what are the priorities that CFOs are focusing on, there are four key priorities as we see. Number one is automation. And I mean, if we were to follow the promise of cloud that is already delivering, there is an option to completely eliminate AR/AP, especially with automation, with the use of robotic process automation. Now, the risk here of not getting onto this is to missing on those cost effectiveness that come with those kind of automation. And we could talk about simple scenarios as invoice entry to settlement, of scanning those invoices using machine learning and robotics to fast track those aspects of settlement into cost entities, etc., and managed by exception. So this is where we would talk about automation. The second aspect we would talk about is, what is the ability of the current CFOs, and Praveen touched upon it in his conversation, to own data and insight. We're not talking about owning reports, but owning data and insight to the business. So that is the second risk that, finance as a function carries, of not being able to come across as a business owner or a business partner in decision making. The third is around creating an impact. Now, obviously, we know that finance has an access to a lot of those functions on how the hygiene of the organization is working. So, how is that finance is embedding those decisions in other function? A classic example in professional services industry, which is traditionally cash rich and a lot of access to liquidity, bringing that into an action for procurement to be able to do early payment discounting. So we are talking about impacting decision making in finance, in HR, in procurement, in warehouse, in supply chain, as creating that impact. And finally, shape. How is finance as an organization driving the shape of the organization by collaborating with industry ecosystem? So the risk of do nothing is no longer an option. So keeping up the space is the way forward from the way we see of Office of Finance as a function.
All right. So you said that there's going to be that you were talking about an inverted pyramid, where you're saying that insights and actions are going to take most of the time for CFOs. So Mr. Dukania, in this age of information and data abundance, what are the challenges of generating insights? As you said, that CFO is now has a predictive role, right? So what are your challenges in doing so?
See, there is a ample of data. There is a plenty of data in the everywhere. So CFO or anybody who's going to predict, who is to take a strategy, who has to plan a strategy for a planning. So data should be meaningful data. And in the data lake kind of a thing, one has to dive down and get that, they say, like when you dive down and get the fruitful data, which is enable you to make decision easy, make to take your decision, to make you to make your future path. So among those data, which data is going to help? So one has to plan that, like what Guru has said in case of a APAR. So data, meaningful data should be that for a CFO's dashboarding kind of a thing. How's the, I mean, data outstanding, the timeline of outstanding, how the recovery cycle, what is the cash flow position, how the from the any particular geographical area some AR or AP is not coming and something. I think I could have missed it. So those kind of information is going to help the CFO, and particularly resource mobilization for any manufacturing company or other thing, for managing the total cash flow and current asset, current cash. He has to plan that what is the future production cycle would be based on the demand forecasting. Demand forecasting again come from the sales team from the market, and sales teams again depend on the field representative and the various channel partner. So all are kind of a cyclic kind of a thing, and the various data, ultimately the source of data is from the real market to the dashboard of a CFO and CAO and decision maker. So that's a flow of data. One has to see that how the valuable and the best use data can be done in that way.
All right. So, Guru, any suggestion on how CFOs can efficiently use data and convert it into right and useful insights?
Yes, I think certainly, and I think Prabin touched upon the typical challenges that the CFOs are facing today, and if you see, if you are to closely observe, Prabin's conversation, it appears to me, the same challenge that is being faced by many CFOs is the challenge of technology is left to the CFOs to figure out either together with their IT organization or by themselves. And this is where there is an there needs to be an expectation from CFOs that these come with business outcome from the platform that they use to run their finance function. So what's happening is that reporting is a separate function. FP&A is becoming more of a reporting organization as compared to an insight organization. So the way we see technology empowering this is by embedding decision making based on data into business processes, and where reporting is not a separate function that runs in parallel to business process, but it is embedded as part of decision making. And this is where many of those insights are going to translate into action for the CFOs to focus on the role that they need to function with, rather than they focusing on technology and tools, and skilling them on things that do not matter beyond finance function. That would be a view that I would like to share.
All right, and as per our poll as well, all these emerging technology, processing, automation, machine learning, artificial intelligence, all of this is so very relevant for our participants for finance function today. So, what I mean, this question goes to you, Praveen. How should technology decisions are really becoming important in digital transformation journey for any CFO. So how are you making that decision? What are the challenges of taking the technology decision for a CFO?
See, the again, like what Guru says, and in these days, we can see that technology is changing day in day out. Every day we can see that the new version of window or new something is coming on. Even the in case of AI, blockchain, and all. So day in day out new technology is coming, and one has to be adaptive on that. So for a CFO, he has to see the present, he has to do a SWOT analysis kind of a thing for his function, for his business organization, that what is going to best for him. Like if you take the blockchain technology, though the many of the countries in advanced world and developed country, they will start using that, but so far in India it's not very popular, and coming days it's going to be. So in that case, the role of a audit, third party verification and other thing is going to be vanished in coming days, because well, you do that the blockchain kind of a thing, so you know the truth of the transaction, and everybody is like in a chain, one has to verify and do the things. So those kind of a thing is coming days, so one has to properly put his in mind that which technology he is going to do, based on their organizational setup, based on their adaptiveness of the that technology and the usefulness. So not only for the sake of technology we are going to adopt one technology, or maybe down the line in coming year or coming so which is not going to help them. Like in case of a ERP, we have seen that so many versions, so many other things is coming. So one has to see that ROI aspect as well from the finance perspective, ROI aspect as well while investing on the technology. That which technology is going to invest and how it's going to benefit them.
All right.
Guru,
And Guru,
Guru,
what
take on
should
it.
what? Yeah. So, Guru, what are your? I mean, what are the key things to keep in mind, while taking technology decision according to you?
Yeah, I think let me share with you what CFOs have shared with me. So because I've been doing this roundtables across India, and we did that across 4 cities in India. So there are three fundamental decision routes that CFOs have taken today. There are a set of CFOs that we have met who have said that, okay, we want to focus on operational efficiencies. We want to focus on business partnering. We want to focus on automation. So these are customers who have said, we would like to upgrade ourselves to modern finance as a straightaway function for us to be relevant to the future state of finance. So that is one set of customers. There is a second set of CFOs who have said that we have a current technology platform that we're currently running. So if we were to, so they have shared with us the challenges that they would face if they were to continue the business practices that are done in the past, which is continue on the same platform and go through painful process of upgrading that from a technology perspective, and go through those risk of getting them up to speed. And there is a third set of CFOs who have asked us, what is the shortest route to get to where we want to get? And this is where our recommendation would be is to look at what you have today and see if there is an option for you to upgrade yourself to the modern finance function as a like to like, because then you get access to a foundation on which you can start your journey of transformation, rather than going through a painful process of transformation where the time to value is long and the risk is unknown. So this would be our view based on the various conversations that CFOs have shared with us.
All right. So, earlier we were talking about cloud technology. I think, Praveen, you have also moved to cloud technology. So, what was, I mean, what was your approach, moving towards cloud technology? And, according to your experience, how has that translated to scale your business?
See, cloud is in any way it's a cost effective, and it will enable your business to grow like anything. I mean, and you will able to get all the efficient technological tools and all. And for a primarily, what I can see for a not a big size of a business, for a medium size of a business and all, cloud is always efficient to move into it. It will be the first step towards moving to digitalization. If they are not ready to invest much or on a on-prem that servers and other things and on-prem technology, so then cloud is the best option. It will enable them to move into that modern technologies and then cost effective and efficiently. So that's in a short I can say that it will be the first step towards digitalization for most of the business organization.
All right. All right. So, Guru, what are the digital opportunities for leading the future finance function? You were talking about that earlier.
Yeah, I think obviously it gets back to the four fundamentals that we talked about. Is one is the opportunity to automation, and that has a significant impact, not just from a cost effectiveness perspective, but also from an operational efficiency. Second, we talked about the ability to own data and insight, and this is where the opportunity to embed analytics into action from a business process perspective. And third is, we talked about creating an impact for them to partner with other departments, and finally to shape the organization. And I think, the overall opportunity as I see with these four things is, we talked about the future state of finance. I think the fundamental question is, what is your plan as an organization to upgrade to modern finance as a function? and how do you want to get there. I think this is how I would say are the fundamental drivers or the fundamental levers and the potential where technology can help.
All right. So, we have in our participants, we also have IT leaders. So, I just want to ask you this one question. How can CFOs, CIOs, CISO, COOs, how can all of them work in tandem towards this digital transformation journey? Because it is not just a finance project. It is a collaborative project that that in the organization everybody has to go along. So how can they work in tandem, Guru?
Yeah, I think if you had to let's take a role of a CEO, and if you look at the agenda that is on the CEO's or the board's mandate, uh, the focus is on growth, and the focus is on revenue growth or increasing number of customers. And there is always a focus, if you're one of those digital native companies, to focus on increasing the valuation of the company. So the question here is, what is the CFO's role to be able to drive that? And if you have to take two fundamental questions, how can CFO take a role when it comes to improving customer experience? Or for that matter, what is the participation of the CFO's role when it comes to driving innovation? And the examples that I could share from some of our own customers who have gone through this journey, CFOs are partnering in helping with business case validation to make sure to understand what does the business case look like more as an enabler rather than a blocker. Second is, how can CFOs help to run those ideas, be it in a startup or in existing mature industries organization, to help those new ideas being implemented leaner from a cost efficiency perspective. And third, if you look at some of those innovations that are being rolled out, many of those comes with a lot of tax incentives. So the question here is that how are CFOs helping those business leaders, be in sales, be in marketing, be in development, take benefit of those incentives. So the role of the CFO is more than sitting in that room or operating that office of finance function and producing that report on ask, but more to step outside to see what can be done in procurement, what can be done in innovation, what can be done in customer experience, what can be done in marketing, or even for that matter improving supply chain efficiencies with the suppliers. So there's a lot of role to play for the CFO to be able to participate. But again, most of the CFOs, as Praveen sent out, is dependent on some of the capabilities that the Office of Finance needs, not just from a technology perspective, but also from a skills and headcount and structure perspective. So obviously there is a board, there is a seat at the board that is available for the CFO to be able to influence and direct the decision with that empowerment.
All right. And Prabin, what are your views regarding this?
Yeah, I agree. I fully agree with the Guru. Like Guru said, it's a CFO's role is not limited only to the current function, because CFO is the one. Because in any business organization, ultimately it's a money. It's all about the finance. When the money comes, then the growth is there, and then business will grow. So, and the custodian of the total money and finance is supposed to be the CFO. So he has to step in every function, every vertical, where the if it by efficiency, the valuation, the value can be created, like in supply chain, what Guru has said. By putting the technology, we can reduce the timeline of the supply chain, and that could be one of the cost measure, cost control tool. And by procurement only, the procurement, if you can do that through digitalization, the procurement process can be simplified. The procurement process where the vast number of larger number of vendor can be on board, and you can procure in a very cost effective way. And in the like way, the sales function is the one of the key function where every CEO and other persons the focus is in. So to get how the customer attraction can be done, it's again through technology. So it's a collaborative kind of a thing, and where there is always in any of the organization where the change is taking place, so always that change has driven. Generally, it has seen that the change is driven through the finance role, through the CFO's desk only. The change is initiated from there only. So CFO has to take a lead on the digitalization, total digitalization process, and in collaboration with the various support other function as well. It's a hand to hand.
All right, very rightly said, sir. And we're also getting some audience questions. So I'll just ask you this one question is please explain the trend on digitalization and its relevance for construction and real estate companies like ours. Can you who would want to take it, Guru?
Yeah, I can give a head start to it, and probably Prabin can add to it. So if you look at, I mean, first of all, I would like to fundamentally differentiate the meaning of the word digitalization and digitization. You know, most of the CFOs have already done digitization because you've got many of your processes already on some sort of technology. So you have, to a degree, digitized many of those things. Digitalization is about improving, enabling business process, people uh, in incorporating digitization. So let's be clear that digitalization is an overarching thing, where digitization is a part of it. Now, if you had to fundamentally agree on that, and if you had to go back to this question on construction and engineering example, there's a huge shift in terms of how compliance has impacted many of these industries. You've seen that, with IFRS 16 and IFRS 15, the way you recognize the revenue has fundamentally shifted, and thereby in terms of how you report profits. And obviously, you will see more of this coming from a regulation perspective. Second, you would see that, especially in India, and most of those companies in construction and engineering, they do not have a land bank issue. The issue is more about realizing those product on time, on budget, and on profit, both from a customer perspective as well from their own internal revenue recognition perspective. Now, this is where we believe that, technology and more so cloud becomes a foundation for most of these engineering and construction companies to, number one, to stay up to date on evolving direction of regulation, be it IFRS or be other regulation that comes for finance. And second, to build out finance into project and portfolio management to be able to recognize that revenue with respect to completion of project, etc. So obviously, there are role to play for engineering construction industry per se, from a technology perspective. And of course, there are some broader aspects that apply not just to engineering and technology, engineering and construction industry, but also to other industries, which is taking benefit of use cases in artificial intelligence, machine learning, to embark on sophisticated tools in data science and statistics, etc. So just to give you perspectives on things that apply to this specific industry, but also for the broader aspect of other industries beyond engineering and construction. I mean, over to you, Praveen, if there's any aspects that you think that you should be adding from your own observation as well.
You have rightly said that all the points you have touched upon, but if you, I would like to add two or three practical kind of aspects of the things. Generally, the traditional property market and real estate market is one to one, but the already we are seeing the shifting. Even one can purchase 1 crore rupees of a flat over the net. It's through the e-com sites and all. So people have that kind of a trust. So one has to see the shifting of the consumer base. So most of the customer, even on the real estate, if they're purchasing on the technological platform, so one has to do the social media marketing in a very efficient way. The real estate company, like in the Facebook and other things. So earlier, which is not very common, particularly in the real estate segment. So that's a one paradigmatic shift. And then one has to, the real estate market is generally end user driven and the investor driven, where the reputation is also there. So if they can manage the CRM kind of a thing on a very efficient way on with the help of technology, then the automatic the customer traction would be there. And in the cost, in the real estate segment, the cost matrix is the cost overrun is and time overrun is the prime concern for any of the things which is drive the customer and as well as the real estate developer both are suffering. And where the technology can chip in, the better project management, better these are days, like if you book any property, you can see the real time how the construction is going on. So that can create a trust. So it's all with the help of technology and other things. So that's a on a practical aspect, my 2 words on this.
Yeah.
All,
Maybe I was
yeah,
to add Pratika here.
sure, Guru. Please carry on.
Yeah, I think Praveen added a very valid point. Praveen added quite a valid point here. He actually touched upon the demand that was traditionally created through more of a physical interaction, and that has shifted to a more of a digital interaction. Obviously, he touched upon engineering and construction, where you could actually create the demand through e-commerce, and the same applies to retail, logistics, and many other companies out there. I mean, here this is where we see the role of CFO to step beyond traditional function to see how do we recognize this revenue, and second, also, how do we monetize, especially with evolving pricing structures, for us to be able to recognize that revenue, which wouldn't have existed in the previous model or the previous business model. So again, as you can see, that there are opportunities for the CFOs to work with the CEO, with the COO on aspects beyond traditional finance. Including recognizing revenue. So these are things that CFOs need to keep in mind to bear with the future state of finance and the evolving business model and their own role, to be able to step up as a business partner.
All right. Thank you, Guru. So, we have another question. This is that how do you envisage the audit as practice will, sorry, how do you envisage the audit as practice will evolve in the future, and will it be more self-regulated, or the audit shall die a natural death? So I think the question says that how do you envisage the audit function and the audit practice going forward, and how will it evolve in the future? And do you think that it will be more self-regulated, or the audit will die a natural death? If so, how do you think the investors' interest should be taken care of? Prabeen, would you
Okay.
like to take this? Okay.
Let me take that. Correctly said, like I was discussing about that blockchain. So in the coming days, like generally in a traditional audit, one has to see that the truthness of the transaction, the generation of the transaction, the genesis of the transaction. Like if you're moving through that blockchain technology, then blockchain technology automatically the trail where the transaction is started and the end point, when automatically through digitalization process, through that process one can verify, one can be make sure that this transaction, the authentic of the transaction, the truthness of the transaction. But I don't agree that the audit will die, because for the investor there is always a third party that certification is always required, where you can trust on somebody that he is certifying. So somebody has, one investor can rely on, like we know sometimes that what are the medicine we need to take, but still we go to doctor and get that medicine prescribed. So that kind of a trust and belief. So in that same way that one has to rely and trust on the auditor, though you can verify the transaction, we can do that, but that confidence and other things one auditor can always build on the investor. Over to you, Guru, if you want to add something.
Yeah, no, I like your example of the doctor. Is basically, you would go a doctor for prescription. Also, to adding to that, I mean, my own personal experience is that, I would Google first, see if those prescriptions are real based on various comments that come with that, and then decide whether it's worthwhile to visit a doctor. As you know, it's a little bit expensive in Singapore to attend to healthcare, and I believe the same applies to many cities in India. Just to leverage on that example into audit, and I like that, and I precisely like that example for that. I would say there will be a fundamental shift also in terms of what audit does today to what the audit do in future. Praveen talked about blockchain. So I mean, the fundamental premise of introducing these new technologies, which is blockchain, or for that matter, cloud as a foundation, is giving that increasing transparency in terms of how things have been done. And so we would, the way I would see is that audit as a function, those basic transparency that technology will be able to provide will significantly increase, which means that audit as a function will probably get into more defining of value added criterias that needs to be taken into account to make sure that stays true. So do we see audit as a function being completely eliminated? The answer would be no. But would we see the audit as a function elevating to a next state of audit with improving technology, with the incorporation of new technology within finance function? I would say the answer is yes.
All right. So, one last question that we're going to take is how should CFOs look at their cost restructuring with this digital transition? And Praveen, can you please share your experience in this?
Cost? Can you
So, so, so the question is, how should CFOs look at their cost restructuring with this transition to digital? And please share your experience.
see? It's a very valid thing because the cost control, cost reduction is the one of the prime focus area for any of the CFO for a value creation and for increase the profitability and to increase the shareholder value. So in the traditional way, the cost cutting and other thing is through the you fly on a normal economic class or something, stay in a cheap hotel and other thing. But I'm just giving one simple example, but through digitalization and through automation process and all, and CFO can control a very fundamental right away the cost. With my own experience, I can say that through putting the digital in a place through with an IT enabler, one can reduce the cost by 20 to 30% in any of the, like in procurement, like traditional way you procure, that's a one thing. And one way, if you can get the, I've explained earlier, if you procure through the digital mode, get the vendor, get the larger broader aspects of the vendor, larger vendor and other things, so you can have these are days there are too many B2B platform where you can really compare the price. And most of the mediocre size or big company, they have a tie-up. The same way in the logistic, the traditional way of hiring the transporter and other things has gone. So where the people go and a Rivigo kind of a things, where the efficiency of the truck owner and transporter has increased, and they run on a relay kind of a model where you can create and generate that 150% of efficiency of your resource. So if you can utilize your resource by 150%, 120%, automatically it will convert into the money and value of in finance and rupee. So 20% cost saving is in any way you are generating on that way. In the same way, on an admin part kind of a thing, these are days we are using all the tools and other things where all this make my trip yatra and all, they are providing the corporate tool where one can book tickets efficiently and in a cost effective way. So there is a small example in a total business value cycle, in the total business value chain. If you fragment one of the process, one of the activity, you can easily see that with the help of technology you can reduce the cost, you can shift the things on a better efficient way. When you increase the efficiency, automatically you are able to save the cost.
All
Guru, you
right.
want to add something?
Actually, we have another question. If Could you please give few examples of business processes where blockchain technology is currently being used in India? So, Guru,
Yeah, I think, would I have examples of brands that I can outright name of use cases at this stage? Not at the moment that I would like to publish without the permission. But let me talk about use cases that are being discussed and being prototyped, where people would like to start experimenting with that. Now, if you look at, if you look at a simple use case of from let's say from sourcing of supply to suppliers and agreeing those payment conditions, or for that matter the penalty conditions of receipt of goods, and thereby the implication on tax. all this information can be captured on a distributed ledger, not just from a records perspective, but also from a payment registry perspective. That would mean that, number one, collaboration with suppliers to be able to provide that information on the same wavelength of blockchain that you're working with, and the readiness of regulatories such as tax authorities for them to be able to share this information. So most of the blockchain use cases that we see are very much being experimented in environment where there is a control of those or collaboration of those stakeholders, be it suppliers, be it other departments within the organization, or be it the other business partners that these organizations work with. But there is a lot of scope to expand that beyond this into organizations such as tax authorities, revenue departments or port authorities, etc. And this is where we see an opportunity to expand beyond that. Just again coming to the core crux of your question, is yes, there are being cases that are being prototyped and experimented, and if this is something that would be of interest to you, then we would be more than happy to experiment that with you as well. But I wouldn't be able to name brands that we're doing with without their permission at this stage.
All right, thank you, Guru. As we're approaching towards the end of our webinar, I'll just have quick questions for both of you. So, starting with, what are the key actions for CFOs going forward?
Learn, unlearn, and then again relearn the new technology. In a simple one word.
All right.
It's a rapid fire kind of a thing, I believe.
No, we have a little more time than that, but okay. Guru.
No, I think, number one, CFOs recognize that the future state of finance is significantly different to the current state of finance, and that gap is overwhelming. So I think recognizing that the future state of finance is the first step. Second, I think, is to look at compelling business benefits of taking that journey to future state of finance. And third would be working with business partners, who could help to upgrade that particular finance function to modern finance. That would be my view.
All right, and what does the... Yes, sir, please continue.
Yeah, I agree with Guru. Like in short, I have told that, but effectively what Guru said, once the CFO has to go along with the total things. I mean, it's all collaborative, collective, and moving forward the future and how the best utilization of any technology can be done.
All right, and what does the future finance function look like?
Yeah, future finance function is like we have discussed so far. It's all the future finance is a business enabler role, strategy role, planning role. It's a not old traditional on the compliance, accounting, and other things. It's all about business partnering role. So one has to be hand to hands go along with the other vertical of a business, and then he has to be part of that growth. It's not only the custodian, it's not only the bookkeeping, it's not only the compliances. It's a total business enabler, business growth role for the CFO, because he's the key strategy maker for any of the. He's the one who is going for an IPO, who's the one who plan for a IPO. So, and when you plan for IPO, so you have to have that vision and horizon for 2 3 years 4 years growth strategy or long-term growth strategy for the company. He has to, one has to face this, the investor. So he has to that kind of a vision in mind, that when the investor will ask that how the profitability will go on and how the things will move on, so he should answer that. He was able to answer that. So that mindset of a CFO is getting changed. It's totally shifting from the compliances to growth.
All right. So, any closing comments? Guru, let's start with you.
Yeah, no, I think, I actually would like to go back to that survey that you did, where there was a significant percentage which said that they would like to look at look at people who have done that in the past. The only thing I would leave you with, with taking into account the future state of finance, there are a lot of CFOs out there in India as well as in Asia Pacific and globally who have taken this journey of upgrading their core finance function to modern finance. So there's a huge opportunity to take a lot of learnings as well as some of the challenges that they faced on the journey, because it wasn't smooth in some cases, and take those into account. And I think that would be my view to leave you with, to learn from your peers, or get those learnings from your peers and have your own learnings and share it with others as you take this journey, which I would like to conclude as calling it as upgrading to modern finance rather than a transformation.
Praveen, any closing comments?
For me,
Yes, sir.
yeah. So the Guru has said correctly, it's for a modern days finance professional. He has to, I mean, learn and get away from few of the old traditional thought and chip in into and step in into the new thought that he has the business enabler. He has to write the growth strategy along with the CEO. So that's when he himself thinks as a business partnering role. So automatically the attitude mindset will change, and then you think on a way the business go away in business things. So one has to adopt the new technology. That's another thing. So when he thinks on it that way, so automatically he thinks on a technology platform. One has to think the technology, how the real time decision can be taken, how the business decision can be enabled, so those kind of a thing, how the growth parameter can be defined, how the other function, other vertical can be integrated on a, and one can think on a single platform. So those kind of things one has to take away. That's I can say only this.
All right. So we are almost at the end of the webinar now. And, before we go, on behalf of the participants and ETCFO team, I thank the speakers for sparing their precious time and addressing the queries in this webinar. Many thanks. I also thank the webinar attendees for their enthusiastic participation. It really is your feedback that makes ETCFO tick. Many, many thanks. We hope to be back with another interesting topic soon. Thank you, everyone.
Thank you all the participant, and have a good day.
Thank you.